What's up everybody, welcome to the Stocks channel. My name is Cory and today we'll look at weekly charts of all of the indices, the VIX and Bitcoin, and I'm going to show you a very realistic bullish scenario moving forward that goes hand in hand with the backtest that we did that the bear market is likely over. First up, let's take a look at a weekly chart of the SPX S&P 500 index. So let's crack open this chart and see what's going on in the stock market today. Alright, thank you again for helping me reach another 2,000 likes. Let's keep the streak going and let's get another 2,000 likes on this video, so please remember to smash that like button. Now it's very important in today's episode to remember the backtest that I did that said the bear market is likely over, and that backtest went back 35 to 50 years and has a success rate of 100%. So for that reason, we are going with the data and we are always going to go with those odds over that length of time and with that level of accuracy. We do want to assume the bear market is over, but we also do want to have very realistic expectations. So I am actually going to give you a very bullish scenario that also has realistic drawdowns moving forward that will take you out to the end of the year. So I really think you're going to learn a lot and really value from this weekend's episode. Alright, so moving forward, we do want to take a quick look in the past, and remember we were coming out of a bear market, and we know it was a bear market because we continued to form lower highs and lower lows, and even when we had that March rally, we were coming from a lower low, and while we did start to put in a higher high, we never got a higher low after that rally. So I continue to tell you market structure is very important to understand, and now we can see that we hit that bottom back in June, and ever since we put in that lower low, it has been higher highs and higher lows ever since. And as you can tell, we just put in a higher high after a higher low. So without a doubt, we are now looking at a bull market structure. And we also do have the benefit of the backtest going 35 to 50 years in the past with a 100% success rate that we know the bear market is likely over, which means we've seen the low for the year and we are now looking forward to some very positive returns in the next 6 to 12 months. So I would really like to draw a very realistic scenario moving forward so that you have realistic expectations and you can understand this is completely normal market volatility. So as you can tell from the lines on my chart, I have the line that defines when we entered the bull market phase, and I also have the line that defines the average drawdown from the date of the signal that told us we were entering the bull market. So as you can tell, this is a very impulsive breadth thrust higher, and you don't get such a strong thrust higher without a lot of money buying back into stocks. And as we know, smart money moves the market, and retail investors and traders, aka the dumb money, are much better off just going along for the ride and not trying to go against the trend, which we now know is a bull trend because we have the higher lows and higher highs, and we have not yet seen that all year long until just recently. So that does go hand in hand that we are entering a bull market. So a realistic expectation moving forward would be a very realistic muted drawdown that could take us back down to SPX levels of about 41.58, or possibly we just saw the drawdown back to the date of the signal, and then we're going to start seeing buyers stepping back in. And then I would expect to see one more higher high to fully define the bull market. And this is going to be a very bullish structure moving into September. A lot of people are already going to be expecting September to be very volatile, and they're more than likely going to be expecting a continuation of this correction. So I do believe the market will go against the obvious, and we're going to see somewhat of a bullish September. However, it's not going to be extremely bullish. We are just looking for a higher high. Then I think a realistic scenario moving forward from September will be a very, very volatile pullback, which could take us down to the average drawdown, which is down there around SPX levels of 4,000. And that is more than likely going to go hand in hand with midterm volatility, because as many of you already know, this is a midterm election year, and we usually get a lot of volatility going into the midterms. So based on our backtest, that would easily take us down to the average drawdown, and then that is going to be more of a macro level higher low from our previous higher low that we had back in July. And then I think coming from that structure, we can get a very strong rally to finish out the year that could easily take us to SPX levels of 4,500 and possibly even higher. So this is a very realistic expectation that I do think if you just have this in the back of your mind, it will help you be a lot less emotional about the price action moving forward. So just be aware of this scenario and understand the stock market does not care what I think. So just because I threw some lines on the chart does not mean it has to happen like this. But this is definitely a scenario that could be playing out, which also gives you a zoomed out view of how we could still come all the way back down to SPX 4000 and still have a bullish market structure. So keep in mind, as an analyst, it's my job to look at the chart and understand where we're likely going And right now, it does look like we are likely going higher to finish out the year, even though that does not mean it will just be a smooth line straight up to new all-time highs. There is going to be plenty of volatility on the way. So understand there is ups and downs moving forward to finish out the year. But if you just think about where we are going, we are more than likely going higher and not lower to finish the end of the year. Obviously, I could be wrong, so you still need to manage your risk. And the best levels to manage your risk on SPX are going to be right here, right around 41.58 and 4,000. Those are the average drawdown levels and support and risk levels that you should be managing your risk moving forward. And understand, if you are just planning on the stock market crashing and going to brand new lows like SPX 3500, you are more than likely going to lose a lot of money going against the bull trend. So if you're still bearish, that's completely fine. I'm not telling you how to trade, but if you just think you can accumulate short positions and hold them as if they were an investment, you are going to get very hurt and more than likely lose a lot of money if I am indeed correct that we're going back into a bull market, because in a bull market, you continue to make higher lows and higher highs, and that is not a market you want to be holding short positions in. So please heed my warning that if you are fundamentally bearish, you need to wait until the chart agrees with you, because right now the chart is showing bullish signs and we have a lot of data and a lot of back tests that agree with the chart being bullish. So there's really nothing else that needs to be said. You are managing your risk around SPX levels of 41.58 and 4,000, and looking forward, this is the exact volatility scenario you should be expecting. It is not just going to be a straight line higher or a straight line lower. There is going to be plenty of ups and downs, but overall, I do believe we are going to finish the year out with a bullish market structure. On the bear bull survey, you can see that the majority of investors are still bearish, with 37.2% of the people that are bearish and about 29.5% of the people that are still neutral. So one of my favorite bullish market structures is when we get a bull trend and the majority of people are bearish and sitting in cash. The reason I love this setup is because that it implies that there is still plenty of money that can come piling in, which is exactly what I want to know if I'm expecting the stock market to go higher. If everybody is already bullish and everybody already bought into the market, it is very difficult for the market to go higher, but this survey is implying that is not the case. We have a bull market structure with a bull market trend, and we have the majority of people that are still bearish and sitting in cash. This is the perfect recipe for a continuation of the bull rally into year end, and this is exactly why I think this is very important to understand. You do not want to be part of the majority. The majority are still bearish, therefore I do think it's better off to be bullish, especially because the market chart is telling us to be bullish with the higher lows and higher highs. So just keep that in mind. If you are still bearish, you are in the majority, and the majority are typically wrong. On the NDX weekly chart, we can see that the NDX is pulling right back down to retest the breakout, which is again a very bullish structure. Anytime you get a bullish breakout, you're going to have a lot of people that are taking profits that want to wait for the retest, and the successful retest will bring fresh money right back into the market. So if we see the NDX starting to get a bounce off of this retest, that is going to bring a lot of that money on the sidelines back into the market, because it's going to look like a successful breakout and a successful retest. And that is going to give a lot of confidence to a lot of those people that were waiting to get confirmation that the bear market is over. So for that reason, on the NDX, I would manage a risk right around 13,000 and 12,950, because those are more than likely going to be the support levels that bring buyers back into this market. And you can also manage a risk around the previous high right around 12,680. As long as we're above that level, we still have higher highs and higher lows coming out of the bear market. And as I said with the SPX, it does look like we are out of the bear market, but we are still expecting realistic volatility moving forward, which means we still need to get another higher low, which is exactly what the market is in the process of putting in right now. The next upside price targets from here is going to be right around 14,307, and then retesting that previous high right around 14,860. So there's going to be plenty more upside to finish out the year if we get the successful bounce off this retest. In the Dow Jones, we were trying to get the bullish breakout above the resistance trendline, but we did start to see sellers coming in. But also remember that Dow Jones also had the most muted drawdown during the bear market, only coming down to about 29,700. So looking forward, the Dow Jones is trying to get the bullish breakout, and it does have higher lows and higher highs. So on the Dow Jones, manage a risk right around 33,270, or the support trend line, which is just a little bit lower right around 33,000. As long as we're above those levels, we are likely going to continue this very impulsive rally, which could take the Dow Jones up to about 34,868. In the Russell 2000, we did get that pullback this week after getting plenty of bullish confirmation with 2 consecutive closes over 1889, and this week we get a 3rd consecutive close above that breakout. So the next upside price target is likely going to be 2100, but we could come all the way back down to retest the breakout at 1889, So like I said, a higher low from here would still be a bullish structure, and we would expect to see buyers stepping in at support and forming another higher high. If at any point we start closing below 1889, just get a little more risk off, because you always want to manage a risk in this market. On the VIX weekly chart, we did see a bounce off 20, so we did not get that second consecutive week below 20, but there's still a real possibility we will see it in the near future, and we will want to see the VIX closing below 20 if we are entering a bull market. So without a doubt, looking at this chart, the VIX has been extremely bearish as of late with a lot of weekly red candles, which is definitely a bullish indication that fear is leaving the market. And you want to see fear leaving the market if you're going back into a bull market. And so far, that is what we're seeing. If at any point the VIX starts spiking back over 24, we will get more cautious. But right now, we just don't see that. On Bitcoin's weekly chart, we are getting a pullback before we got to the resistance trendline, which does increase the probabilities we are coming back down to retest support at 19,000. And you do have to remember that Bitcoin is still in a bear market with lower highs and lower lows, so it is not entering a bull market like we see in the stock market. A lot of people like to think the stock market and Bitcoin have to move together, but that is not true. We are still in the crypto winter, which is very likely going to last until we get through September. So for that reason, I expect Bitcoin to get a lot more bullish in Q4, but nobody knows how low it's going to go until we reach the bottom. So watch for that retest at 19,000. And if we break 19,000, we could go as low as 12,000. Now, once we start breaking above about 28 to 30,000, we'll be looking a lot more bullish, because we will start to see some higher lows and higher highs. So just be patient and understand we are still in the bear market until we get that bullish breakout. On the ARKK weekly chart, we can see that we are still in the bear market, because ARKK came back up to retest the support trend line, which is now obviously going to be resistance, because we broke down through support, which is now resistance. And we can see a very strong rejection from that test. If this doesn't prove that technical analysis is exactly how you trade the stock market, I don't think anything will, because that is a perfect retest of the breakdown and an extremely strong rejection, which tells us that the ARK ETF is not ready to exit the bear market just yet, which tells you need to be extremely risk off in this ETF, because it could be going for another leg lower. Remember, this ETF is not in the indices, so there's no reason it needs to go higher just because the rest of the stock market is. So just manage your risk very closely, and I would be extremely risk off while it's below 48. So jumping back over to the S&P 500, I strongly believe that we are entering another bull market phase, and the back tests tell us that we are also doing so. So moving forward, it is time to start thinking about buying dips off support and not just accumulating short positions because you're fundamentally bearish. Be very cautious shorting this market, and if you are shorting the market, know your exit plan so you don't get caught holding a short position if we are indeed going back into a bull market. Remember, we are talking about data and facts here. I have no reason to be fundamentally bullish. I am strictly following the back-tested data and what the chart is telling us, because I do believe that is how you make money in the stock market. Remember, price is the only thing that pays you, and right now price is trending higher. So if you're shorting the market, you are losing money when you could be going in the direction of the trend and making money. You cannot have bias and you cannot have pride in this game. You have to follow what the chart is doing, because the chart is the only thing that will pay you. When the chart is going higher, you have to make money going in long trades. And when the chart is going lower, you need to be risk off, and that is why we know our risk levels. Also remember that I teach how to follow price action, and I teach you exactly how to trade intraday with my updates in the Stocks Channel Discord. So if you want help trading this market and you want to be a part of the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. I also have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information about Bank or want to subscribe, you can click on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.